Good morning, good afternoon, everyone. Today is the last day of April, Thursday, April the 30th. And looks like a mixed bag for earnings, but the market is hanging in there so far today, so that's good. We'll take a look at the ones that have reported. But how do you know when something might actually blow out numbers? I'm going to talk about this today. So this is TTMI. How can these indicators predict something like this? This is today's candle after earnings last night. So we're going to show how you can use stock charts to help you determine whether earnings are going to be okay. I am not a financial advisor. This is for educational and entertainment purposes only. So let's take a look. Let's go look at the dashboard. We'll do that first today. You can see over here the S&P is at the highs of the day so far. It is currently 11:25 a.m. on the East Coast. However, the S&P is not breaking out. So still looking pretty good, still bullish, consolidating sideways. This could continue like this for a little while. The Russell is starting to improve today. It's actually doing better than the S&P after it touched the support level down here. So these two lines are the previous all-time high and the closing high. Same thing with the S&P over here. These are the previous all-time high and closing high right about 7,000. And notice that the 21 is moving up right to where that support level is. So would not be surprising to see it pull back into this area, but today things look pretty good. Mostly earnings were coming in great, mostly. So that's pushing things up. We still have a couple more weeks of earnings left and some big ones still to go. We had 4 big ones yesterday. We'll look at those. But overall, the market is still pretty bullish. Bitcoin also trying to make a run back higher today. It went down and touched the 21, but not real impressive, frankly. So overall, it looks like the market is kind of just treading water, maybe getting a little tired. We'll see. Let's go up here and take a look at the, first of all, we'll look at the sectors. Industrials, number one leading sector today. And then we've got utilities, healthcare, the next ones, which are defensive sectors, gold and the Russell right behind it, then staples. At the bottom, we have technology, discretionary, NASDAQ 100, communications. Those are all the aggressive sectors. So they are lagging the S&P or underperforming the S&P. So that's not really what you want to see. Let's take a look at the, this is my ultra chart list. I'll show you this in a second where you can find this chart list if you want to use the same one. Qualcomm up 18%. They reported, had a great report. FTAI, they reported up 16% after coming off the bottom. Looks like they're recovering. Teradyne actually had a great report and gapped down significantly yesterday, but now it's moving back up again. So that might have been a good entry point for Teradyne because they did have a good report, up 14%, but down significantly yesterday. Viavi Solutions, black candle, gapped up and now selling off right now. Keep an eye on that one. That one has been a really strong stock for a few months now. So if it doesn't really close that gap down there, that's going to be good. Here's TTMI, also a black candle. We'll look at that here in a second. Avis up 9%, almost 10% today, but huge sell-off. So I'd be a little wary of Avis. Caterpillar, great report. It's up. Eli Lilly blew away the numbers. It's up today as well, but still really not a change of character yet. It's right on the verge of breaking the downtrend line. So it really needs to perform well tomorrow. Modine Manufacturing is in the industrial space. Over here, qubits, quantum stocks are starting to make a run as well. Google had a good report. They gapped up and hanging in there. Rocket Lab starting to move up after a hammer, so that might be a good entry. Qubits also had a hammer yesterday. Let's go one more down and see what we have. Altria had a great report. Fix starting to move up. Cipher in that cyberspace, mining space, data centers, it's moving up as well. And here's IonQ. That's also a quantum stock. Let's look at the bottom of the list. Meta and Microsoft, the two at the very bottom of this list. Meta down 9% and Microsoft down 5%. So both of those had just okay reports yesterday and sold off pretty hard this morning. NVIDIA also is at the bottom of the list, starting to sell off. What else? Go one more down. NBIS, a data center stock, selling off. Zscaler, not looking too great. Fortinet, Form Factor, gapped up a little bit, but then started to sell off. CRM, Salesforce, continuing to struggle. So that's at the bottom of the list. Astera Labs is also down there. But the big ones are Microsoft and Meta, the two big ones right there. And the two that were heading down, and then at the top of the list, we had, let's see, Google looked pretty good. And there was one other one. Marvell, starting to move back higher. AbbVie had a great report. They actually gapped down and then just recovered and continues to go higher. Lots of buying coming in on that one. All right, let's go up and take a look at the stocks that have reported. Here's Caterpillar. I showed you that one. Eli Lilly blew away their numbers, looking pretty good. AbbVie, looking great. Amazon is the other one I was trying to think of. Amazon gapped up and now selling off, coming right back down to yesterday's open. So Amazon is reversing course. That could be a failed breakout right there. General Dynamics had a pretty good report. There's Google up there. Meta sold off. Microsoft sold off. Qualcomm we talked about. Starbucks had a pretty good report. They're moving up. And then the last one here, Verizon and Visa had a great report. They gapped up, but then ended with a shooting star. And now today, confirmation it's selling off a little bit more today. All right, I want to take a look at the one that I started the session with, TTMI. How can these predict this? Now, yes, it's selling off after a big, huge gap higher, but it went basically from, let's see, the close yesterday was 137.50 and the open today was 178. So $40 basically. Gapped up $40. This is all profit taking right here. But how do these indicators down here imply that this kind of move is going to happen moving into earnings? This is one way that you can determine whether you want to hold a stock going into earnings or not. So these three down here, one of the unique things that stock charts allows you to do is a relative comparison using two parameters. So down here you can see TTMI versus its industry group. This is the symbol for the industry group. The way that it's set up is TTMI colon and then the industry group symbol. But you can do it automatically just by putting in symbol and industry down here. So it's $ symbol, $ industry. So it doesn't matter what stock I put up here. It's going to bring up whatever industry group it's associated with by doing it this way down here. So symbol versus the S&P and industry group versus the S&P. Those are the three things we want to look at. First of all, you can see moving into this goes back 4 months. This is a 4-month chart right here. So this goes back to before the previous earnings, which are right back in here somewhere. The first one is the symbol, the stock, TTMI in this case, versus its own industry group. Its industry group is electrical components. So the first thing you might want to do is see which industry groups are outperforming. So I have this chart list that I created called Relative Industries. These are all of the industry groups relative to the S&P. So in other words, are they outperforming or underperforming the S&P? And then I went back 3 months, basically a quarter. So back to last quarter. And I want to see the ones that are at the top of the list that have been outperforming the S&P, which industry groups have been outperforming the S&P for the last quarter. And what you can see here is heavy construction is outperformed by 34%, trucking by 24%, marine transportation by almost 24%. By the way, those are all industrial. Those are all in the industrial sector. And then number 4 on the list is electrical components and equipment, outperformed by 22%. and exploration and production outperformed by 20. So these 5 at the top are the best industry groups. So if you want to outperform the S&P, you need to find stocks that are outperforming their industry, and they are in an industry that's outperforming the S&P. And that's what this tells you. So the first one up here is how's it doing versus its own peers, its own industry group. And in this case, TTMI over the last 4 months has outperformed its own peer group by 57%. Down here is 0. So anything above 0, back here is where it first started to outperform. But anything above 0 means it's doing better than its peer group. And this is a moving average line, the pink one, so it's outperforming its own trend, and it is significantly outperforming its peers. So that's number 1. You want to find stocks that are outperforming their own industry group. You also want to find an industry group that's outperforming the S&P. That's what this third one, the gold one down here, tells you. So down here you have industry, $ industry. In this case, it's electrical components versus the S&P. And you can see it is the industry that TTMI is in is outperforming the S&P by 51%. We saw that already when we did the search right here. So going back 4 months, it's been outperforming by 51%. And then finally, how is the stock doing versus the S&P itself? And in this case, it's outperformed the S&P by 104%. So all 3 of these are in alignment. It is outperforming everything. So if you want to find stocks that are outperforming the index, in this case, the S&P, then find stocks that are outperforming their own peers. Their industry group is outperforming the S&P, and they themselves are outperforming the S&P. So in every case for TTMI, this was an indication going into earnings that they were going to do really well. So that's what these indicators can tell you. They can be very powerful. Let's just, out of curiosity, look at Eli Lilly. Now, Eli Lilly is in the pharmaceuticals industry group and in healthcare, and neither of those are outperforming. So healthcare right here versus the S&P, the red one, here's the 0 line. It is underperforming the S&P by 16%. And the industry group, pharmaceuticals, is underperforming the S&P as well, underperforming by 4%, almost 5%. And how's Eli Lilly doing versus its own industry? Well, versus pharmaceuticals, Eli Lilly is actually underperforming by 12%. So all of those things are not conducive to Lilly outperforming the S&P. However, the company itself had a blowout earnings. So how do you determine, what do you do in a case like this? Do you believe that the actual value should be more up here at 1100 where the top was? Or is the market telling us that the value is somewhere right where we are right now at around 900, maybe 1,000? We don't know. We don't know until, first of all, Eli Lilly needs to break out of these, the trend line, number 1, to have a change of character. So it needs to break out above that. It also needs to break out above the 50-day. Right now, it's just broken the 200. It was below the 200-day. Just broken the 21 today. Now it needs to break the 50. That's the next step. And then it needs to break above this level here, which is at about 9. Let's see where that is exactly. Looks like 975, something like that. Right there. 970, actually right about here. So about 975. So if it can get close above 975, then it will have broken all of its resistance levels, and it will then have a change of character. Right now, it looks very promising, especially with a green bar. So that's what Eli Lilly looks like. Let's look at a couple of other ones. Microsoft just reported and sold off. Microsoft is outperforming its industry. It is underperforming the S&P, and the industry is significantly underperforming the S&P. Now, that's industry is software, so Software has been underperforming for quite a while now, but software is down by 23%. So Microsoft is outperforming its own peers in software by 4%. However, it's underperforming the other two. So it's sold off. How about Meta? Meta also gapped down. Notice it went right up to the 200-day and couldn't get through it. Going into earnings, that should be a big red flag going into earnings. On top of that, Meta is underperforming. It was sitting basically just below the zero line just before earnings right back here. So you want to look at what this looked like just before the earnings. Meta is underperforming its industry, underperforming the S&P, although its industry group is actually outperforming the S&P by 5%. But the two important ones is, number one, its own industry. Number two is the S&P. So Meta implied that it may not hit the number. Amazon has a big black candle. It's now below yesterday's open, so it's selling off significantly. That is a failed breakout. You can see here yesterday, it was basically just keeping pace with its own industry. So it was basically just going along for the ride. It was outperforming the S&P, and its industry is outperforming the S&P. So 2 out of 3 look pretty good, but Amazon itself was just going along for the ride with the rest of its peer group, and now it is selling off. And Google's the other one that reported. Google right now gapped up. It's holding in up there, but it's got a spinning top, so sometimes that's a reversal candle. But let's take a look down here. Outperforming its industry group significantly. In fact, yesterday it was outperforming by about 5%. Its own industry group outperforming the S&P, and its group is outperforming the S&P as well. So that one is 3 for 3 for Google. That one was implying that it's probably going to do okay. Let's look at Apple, who reports tonight, I believe. Now, Apple, in this case, underperforming the S&P significantly, down 6.75%, underperformance of, its own industry group. So Apple is in the computer hardware industry. It is significantly underperforming its peers. It is underperforming the S&P. Its industry, its peers are outperforming the S&P by 3%. But because of these two, especially how it's doing versus its peers, I would not be surprised if Apple misses when they report. We'll see. We'll see how these indicators actually do. So that's what it looks like. That's what I wanted to show you today. Let me know if you have any questions, comments, anything you want me to take a look at. Be happy to do that. And before I go, let's see real quick what the S&P is doing. So S&P is still hanging in there. The VIX is down. So it's almost down to 17. So volatility is very low. That is supportive of the market staying up here and maybe even breaking out. But right now it's continuing to move sideways. And notice the MACD. You can see right here, the lines are getting ready to cross. In fact, if I go back and look at one thing I put on the the website, is the MACD, the Stock Traders Almanac signals the MACD sell signal. Right now, it is still not giving a sell signal, but it is starting to get there. It's rolling over, starting to move down. The other thing over here on the charts page that I was looking at earlier are these 17-year charts. So this is the S&P over 17 years. You can see right here when it does, this is the momentum graph. It never really made it below the green line. So the momentum really didn't change much, even with the sell-off. So it's very positive, very bullish for the S&P still. But we'll see. Right now, it's just consolidating and treading water, going sideways. All right. Thanks for watching, everyone. Talk to you tomorrow on the first day of May, and we'll do it again then. Thanks.